Welcome to Viva Farms, and tonight we're having a workshop on farm business structures and farm taxes. I'm really excited to see everyone here. We've got a pretty full house, so yeah, please check in our website or things for other events that are coming up. Let's see, this workshop is offered as part of a USDA grant that allows us to put this on from the Office of Advocacy and Outreach. So thank you to the USDA for helping make this possible. This workshop is also a bilingual workshop, so we offer it in English and with simultaneous interpretation into Spanish. So Kate from WSU is in the back doing that live interpretation. So thank you to WSU for being part of this. And so when you hear Kate talking in the back, that's her just making the workshop more accessible. And we've got folks from Skagit Media Marketing that are here tonight and they're filming this, so it's going to be sort of a webinar that we're going to offer on our website at a later date for those folks.
I'm Sherry Muntean. I don't consider myself an expert. I just specialize in farm taxes, and I'm more than happy to hear all of your questions. I would love to support each of you with the special interests and questions that you have personally, as well as just giving you general information. Anything we don't have time to address today, I did leave a couple business cards up front. I'm also going to write them down on the board, so maybe we can address them at the end if we need to. So please feel free to ask anything that you may want to ask. And I want to make sure, again, everyone knows we're being recorded this evening for posterity. So, okay. Okay, the first thing we're going to talk about is hopefully the simplest of topics, how to keep your records and receipts. I am not going to read through all this information. These slides, I'm hoping, are going to be available on the Viva website. They will definitely be available on the foodfromfarms.org website. And this information, as you can see at the bottom of the page, is already on the Food From Farms website. There's a great deal of resources there if you need to look at them about employment law and other such topics. The long and short of record retention is I strongly suggest that everyone keeps all their information and receipts for at least 7 years. And it's 7 years after you file your tax return. So the statute of limitations, if you don't commit fraud or do something really horrible, is 7 years from the point that you file. And it's usually only 3 years. And I do want to give you one example of how that can bite you. Please do file your tax returns every year, even if the IRS instructions say that you're under the threshold to do so. Because, like I said, the statute of limitations starts as of the date you file. So, for example, there was a court case recently where the IRS came back and charged someone for payroll taxes on a 20-year-old tax return. And they were able to do it because he had never filed his return. You can only imagine the late payment penalties on something like that. So please make sure you always file. That'll get the statute rolling, and it'll protect you in the future if they ever ask questions. Are there any questions on record retention periods? I did have a question earlier about what type of accounting software to use and how to keep your records. There are so many different options, and if you do have questions kind of how that's going to serve you best, it really depends on how you work and what your budget is, what's going to serve you best. There is freeware out there, and what that means is software that you can use online that doesn't cost you anything. And the nice thing about using something like FreshBooks or Wave apps is that it's going to create actual reports for you if you input your information in there, and it can give you a lot of flexibility in being able to view your business and see how you're doing. Some people don't feel comfortable using software and using that sort of platform, so they end up using something like a spreadsheet, and that's perfectly viable. And if you want help developing a spreadsheet, I have some I've developed for farmers I'd be happy to send to you. So that way you can just put your expenses and income in columns, total them at the end of the year, and it provides you essentially the same result, and it's also free. The benefit to using something like QuickBooks is if you're developing into a larger farm, it is the most robust solution of all of the low-cost solutions. That can be provided to you. The maximum cost if you use a wholesale plan, and I can help you with that, is $30 a month. That doesn't include payroll, and we can talk about payroll later. But those are the basic solutions, and there's more information on different cloud-based solutions for you on the link on this slide. Yes?
The low-cost solutions, for those two examples, do they interface with the popular taxware packages like
QuickBooks would integrate with TurboTax. I don't know about Xero. Yes. Yes, I apologize. The question was asked whether or not the low-cost solutions would integrate with tax software. Some of the freeware, I understand, does integrate, but I don't know to what degree. It obviously depends on the online solution you're using and the tax software you're using. So that might be a consideration when you get to the point of choosing what you want to use, is how you intend to do your taxes. Because it can save you a great deal of money when you're working with a CPA, or if you're preparing your own taxes, it can save you a lot of time if you pick the right solution and make sure it works for you at year end. Okay, accounting methods. There are basically 4 different methods, 3, but 4 when you take into account you can combine any method in any way that you want. But the rule that the IRS has is that you're supposed to technically use the same method that you use when you keep your books on your tax return, okay? So the cash method is I keep track of my money essentially when I get it, and I keep track of my money when I spend it. And that's basically the cash method, to oversimplify it. The accrual method is, for example, you're recording bills and you're recording invoices when they're due, okay? So if you send someone an invoice and you've sent them their CSA, you've invoiced them for that CSA, whether or not they've sent you that money yet, it's income to you. So that would be the accrual method. So I think most farmers, I actually recommend that they use something like the cash method, because especially if you're a small farm, you can't afford to be paying taxes on money you haven't received yet. So I would be very careful, especially as a small farmer, which one of these methods you use. I'm not going to talk about the crop method because, again, it's probably not going to apply to you, but if you guys have questions after the class about that, please feel free to come to me. And as I indicated, you can also use a combination of methods. For example, many of you will send out invoices, okay? And you will want to keep track of your accounts receivable, but you may just record all of your expenses as of the date you pay them. You're not going to be recording the bills that you receive. So that's acceptable to the IRS. You just need to be consistent. You can't change your method of accounting from year to year unless you fill out special forms and do a lot of calculations, which I could talk to you about later. But I suggest that you choose a method that you feel is going to work for you, both personally and on a tax basis. And we can talk about that more here in a little bit. Okay, we're going to do an exercise in a little bit. Actually, I think it's right after this slide, where we're going to look at kind of considering what the basic accounts are that you should use. And when I say accounts, if you have all of your receipts stacked up, it's like, how should I group these for tax purposes? How should I group these so that I can manage my farm effectively and see if I'm spending my money effectively and billing people effectively or enough for the produce that I am growing or the livestock that I'm raising? So there's a lot of things that go into making those decisions. It's not as simple as just looking at the Schedule F, which I have attached in your packet there, because that is important, you know, so that you know what you're going to be reporting, for example, on your individual tax return or your business tax return. But it's also important for you to consider, how do I want to manage my business, okay? Don't separate things into categories that are so small that it doesn't have an effect on your business. For example, a lot of people will break utilities into water and electric and cell and telephone bills. But it may make sense to just look at utilities as one group. Do you follow what I'm saying? It just depends on at what level do you want to manage your expenses. So you shouldn't be having categories that you don't want to manage. And be aware if you have a software, for example, like QuickBooks or Xero or FreshBooks, you can have all of those things in utilities and still find out how much you spent on Comcast. It doesn't have to be a separate category to get that information. Okay? So, here we are. We're on our activity. So our first activity is, as we noted, one of the important things is to recognize what your mission and goals are. Recognize the things that you want to manage, the things that are important to you. Like, do you want to see if developing a CSA program is worthwhile? Or do you want to see if your farm stand is more lucrative than going to the farmer's market? You may end up having categories for farmer's market income, for CSA income, for farm stand income. Do you follow what I'm saying? So kind of thinking through, what are my goals? How do I want to make money? What type of expenses do I see myself having, and how do I want to manage them? Like when I'm looking at my expenses and I want to see if this project is worthwhile, how do I need to group my receipts in order to be able to intelligently evaluate that? So that's why we're starting with this sheet where you're going to be looking at your mission and your goals. Okay? And then the next sheet is actually a really lovely, it's an excerpt, by the way, from one of the publications. Do you want to show them?
Yeah, these are, so we have, the 2 pages that you have are 2 pages out of this larger booklet that we have in English and Spanish here, printed on nice paper that you can take with you. So you can do the exercise here, and then if you want to use this as a resource, grab it before you leave.
Yeah, so that it has a lot more information on how to write a thorough business plan, but this is just the first page. So we're just going to hit the high notes, okay, so that you can kind of take a moment to think about your business. Feel free to kind of talk amongst yourselves if you want, to kind of brainstorm with each other, kind of like your little tables. And then once you've done that, you've filled out this section, and I'm going to give you, 10 minutes, do we think? 10 minutes? I want you to look at, put your your Schedule F, which is the individual tax form if you're filing as an individual, okay, next to your budget here, and decide what categories do I want to use possibly. And you may add some categories. You may cross out some categories. So just kind of spend some time thinking about, give you a moment to think about what we just talked about, and identify the things that you feel are important to track. Okay, so go ahead and talk amongst yourselves, and we're going to take 10 minutes.
I had to read
Okay, seems like things have quieted. So are there any, before we move to the next section, are there any questions about different accounting methods or anything that came up while you guys were talking? Yes?
I'm just curious to get your take on it, because I've been to a number of different accounting workshops at various conferences, and it
Yeah.
seems like everybody likes to treat this differently.
Yes,
so,
I do.
in terms of how to deal with, like, basically, what do you
put in cost of goods sold. Like I've had some accountants say like only put things that you're buying and reselling in cost of goods sold, and I've had others say like use that for your variable expenses because it does affect like where it shows up on your P&L, right? So
It
just
does.
trying to like think of the best way.
You have to repeat.
Yes. So she was asking where you put your variable expenses. She should put it, you know, down in your fertilizer and your seeds and all of that stuff, or should you put it up in cost of goods sold? And the answer is it depends.
That's what I figured. I just wanted to make
Yeah. So clearly, if you're going to be filing on a Schedule F, I might choose to break it out the way they do on a Schedule F. Having said that, it also depends on
How you want to track your business. You can also have all those different categories and have it within cost of goods sold, which can be very edifying. And what I mean by that is that if you have, for example, the money that it takes to raise the things that you're going to sell, grouped in cost of goods sold, that gross profit number is going to tell you how much you're basically making before all of your overhead. Okay, things like rent and maybe your own pay, other types of things, taxes. So it can be of value to put it up there. Where you actually report it on your tax return doesn't really matter unless you have over $1 million of inventory, which probably none of you will. Yeah. So I would group it in a way that's meaningful to you, because at the end of the day, the information does need to be classified in a clean manner so that you can effectively do your taxes. But the most important thing is that you can effectively manage your business. Yes.
So I was just looking at the Schedule F and the things that are kind of vague, like depreciation on your vehicles, which I think is great. I bought a used truck, right? So I
Yes.
have a number of how much it costs.
Yes.
And I have mileage of when I went to the country store for supplies and things
Yes.
like that. But how do I determine depreciation or like really vague things that the IRS won't ding me for?
So vehicles are complicated because there are a lot of different options. Personally, I recommend using the mileage method instead of depreciating vehicles. However, if you have a great deal of, if it's used 100% for business purposes, okay, and you have enough income to, for example, cover the cost of your truck in this year, and you want to make sure you're reducing your taxable income, then you might want to use your actual expenses, okay? And the reason is because the mileage method, which is 56.5 cents per mile this year, often the write-off can end up being higher over time than if you wrote off the actual cost of your repairs, your depreciation, your insurance, all of those things, okay? So you kind of need to consider what's going to serve you best when you decide how to treat that particular asset when it comes to vehicles. And that leads me to another question that was asked earlier in the day, actually, and it was about depreciation. And that is a wonderful way, and we're going to be talking about that here in a minute, about different tax decisions that you can make. But while we're on the topic, it's very important to consider where you are each year when you determine how to treat your fixed assets. Now, fixed assets, for those of you who don't know what I'm talking about, are things like your greenhouses, your buildings. You can make an election to just write off everything under $2,500. I suggest doing that because tracking depreciation on every little tiny thing is horrendous. But you do have to make the election. So that's something, there would be a box to check somewhere in your software if you're doing that yourself. Having said that, there's bonus depreciation that's available right now. You can also 100% write off a lot of your assets with Section 179 if you have income to cover them. So there's a lot of options available to you. However, if you're in the first years of your farm and you don't have a lot of income, you may not want to make that choice. You may want to depreciate it over the longest amount of time possible, so that way you have it to offset your gains in your income in later years. So spend some time thinking about it, what's going to serve you best every time you get a new asset. Okay?
So when you have a farm and you have a diversified means of income, like we have Airbnb and we have HipCamp, and that before the produce started coming in, that paid all the farm's bills. Would I put that on my Schedule F? Because I don't, how would that work?
So it depends. You mentioned an Airbnb. So the IRS does not like you to mix activities, okay? Yeah, they don't want you covering losses with gains, because the way they look at it is that hobby losses are not okay to deduct. They don't want you reducing your taxable income by writing off your hobbies. So they're going to want you to put your Airbnb on Schedule E. Okay, they're going to. Yes, your 1099 income goes on your Schedule E, or your Schedule F, or your Schedule C, or page 1 of your 1040. Okay, depending on what activity it's associated with. And for those of you who don't know what I'm talking about, the 1099 is the document that you'll get in the mail that says, hey, we paid you money for a thing. So obviously, that income shows up on whatever form it belongs on, right? Depending on the activity you're doing. So the Airbnb would be on a Schedule E, and you're going to make sure that's separate from the farm because it's a separate activity. It's a rental real estate activity.
Okay.
So when you say it's got to be separate from the farm, are you talking about something more complicated in terms of the structure, like a holding company that owns a farm and a bed and breakfast?
Yes.
And
So what I was just talking about refers only to when you're doing activities as an individual. If you're doing activities as an LLC and the property is owned by the LLC and the farm is owned by an LLC and all the activities are happening within one company, it's a different ball of wax. But an attorney would probably tell you to have separate companies for each activity because you don't want liability on your farm to make you lose your bed and breakfast. So, you know, but that's the attorney's arena. Yes?
Isn't there a limit though, if like you say you do, okay, personal example, if my Airbnb made money for the farm, but it was under, was it 6 grand or something? I don't know, it's under 20, I don't have to report it, right?
You do have to report all income that you make.
Okay, but the way that you said, okay.
Yeah. Yeah. Unless you could argue that it's farm related. You know what I'm saying? So well, so we could discuss that, you know. I mean, obviously, if you made it a farm retreat and it was educational, related to the farm, and it was an event for the farm, and et cetera, you could probably argue that it's part of your farm activity. But if they're just coming and staying in your house while they're on vacation, I don't think you could make that argument.
Yeah, and I would just say too that I think you know there's going to be a lot of questions that are like pretty individual in terms of what people.
And we'll work
we all so just.
Yeah, and just so you guys know, the reason I did humor those questions is because I want everyone to know that everyone's situations is going to be different, and that you do need to be aware that you can't just lump everything onto one form. The moral of that story is be aware of all the things you're doing, because most farmers do have to do other things to make money, especially when they're starting out, and you do need to report them all in different ways depending on what you're doing. Okay, and track them separately. Okay, track them in separate sets of books on separate spreadsheets. Okay, employee versus independent contractor. The reason I have this subtitled, Let the Law Decide, is because the very biggest mistake that people make is they think they can choose. We don't get to choose if someone's an independent contractor or an employee. Okay, the law dictates if someone's an independent contractor or an employee. Okay, there is a ton of guidance out there. I've listed it here. there's even more than this. The Department of Labor's website, which I list at the bottom of the page here, is enormous. The section that relates most strongly to whether or not someone is an employee is going to be the information on the Fair Labor Standards Act. The other thing that I pointed out on this page that I want you guys to pay close attention to is that Washington state law is very, very clear. If someone doesn't have a UBI number, they don't have a business license, they are not an independent contractor, period. Okay? They have to be covered by L&I, you have to make sure they're covered by L&I, and you need to treat them like an employee because they aren't holding themselves out as a business. You need to make sure you're taking good care of your people. And I included this not because I'm going to go through it, but because I want you guys to be aware. This is actually, as you notice, from the U.S. Department of Labor. The bottom corner, right over here, just because everybody else does it that way doesn't make it right or defensible, okay? Just because all of your neighboring farms treat all of their farm labor as a contractor doesn't mean they are, okay? And I want you to be very aware of that. Question?
Do you want questions at the end, or?
I'm going to have a question, but please go ahead.
Can you talk at all about like interns versus employees? Because isn't there an ag apprenticeship law that you can have?
I was just asked about interns versus employees, and yeah, actually, I don't mind actually breaking for a moment here. So the definition of an intern is very clear. There has to be an opportunity for them to have a job when they're done. Okay, you don't have to pay them at all. However, if you're not planning on having them have an opportunity for employment, you can't call them an intern, okay? Just because, again, it's the law that decides if they're an intern, not you. You can't just make up the word intern, not pay anyone any money, and be fair to your people. They need to actually be working towards the goal of potential employment, okay? And that leads us to this next point. A lot of people, when they're looking at employee versus independent contractor, they think that what they're looking at is whether or not they're going to save money. What the state and the federal government looks at, and what I hope all of you look at too, because you're wonderful people, because you're farmers, and you love the earth and you love people, is that if you misclassify somebody and you don't treat them as an employee when they actually are one, you're actually causing them a great deal of harm, okay? You're causing them to pay taxes that you're supposed to be paying for them. You're making it so that they don't get benefits that they are entitled to, such as unemployment security and their L&I benefits if they get injured. And by the way, that protects you a great deal also, because if you have someone get injured on your farm and they're covered by L&I, you don't have liability for it. The state will pick that up. It's very cheap insurance when you look at it that way. And this last point here, that I took a class on employment law, and the attorney said in his experience, this is a bet the organization proposition. It doesn't come back to haunt you until it does, but if it does, it can shut you down. It's extremely expensive. The penalties are extremely expensive. To defend yourself is extremely expensive if you end up in trouble with the Department of Labor. So please don't get in trouble with the Department of Labor. Take care of your people and do what it takes to do right by them. Okay, so basically what this slide says, in short, is that pretty much everybody is an employee. The bottom line is that you can't pay somebody a salary unless they're making at least 455 hours a week, okay? You could pay them a salary, but you still need to track their hours, and you need to assure that they're making at least minimum wage plus time and a half overtime, okay? So salary's okay, but you gotta make sure that you're still meeting all the minimums. The only exception that the attorney that I just referred to has ever found in his entire life where someone didn't actually fall in the category of being required to be an employee was, and I'm going to make an exception to that, was when he ran into a farm, which is why I'm mentioning it, but it was a farm that was a commune. So they didn't ever actually sell anything. All they did is raise produce for themselves and eat it themselves, and they had basically no contact with the outside world. Because this day and age, almost everything you do ends up becoming interstate commerce. Because we take credit cards, we go on Facebook, we do things that cross state lines all the time. So we need to be very sensitive about that. The only exception would be, for example, someone like myself. I am an independent contractor when I come and work for people. I do have my own tax ID number. I send you an invoice. I clearly don't work for you. I may be serving you, but I clearly have an independent business. I clearly do this for other people. I clearly have all my own equipment. Do you follow what I'm saying? So you may have a tree trimmer that comes onto your farm who has his own tree trimming business, and he sends you an invoice and he does all those things. Of course, he's not an employee. But if you have a farm laborer who only works for you, he doesn't bring his own stuff, you set his hours, he's an employee. So that should be pretty clear. Okay. Okay, and this talks about, for all your employees, the basic things that you're required to do according to the Fair Labor Standards Act. Like I said, please make sure that you're paying them all minimum wage. Make sure that they get paid time and a half for overtime. And you have to keep...
exception for that? Farm exception for overtime?
I was just asked if there was a farm exception for overtime, and the answer is I don't know. And so I would love to look that up, and if I find out there is, I will make sure that I get back to the Viva Farms folks. And
I just know farmers that I know have ever gotten overtime.
well, and again, remember the slide. Just because everyone does it that way doesn't make it right. Like Sakima, as we all know, just got creamed royally because they weren't giving people breaks. So you got to be really careful. But I will look that up because there may be an exception. I don't know. I haven't heard of one. And the other thing, which is very interesting, is that you have to always calculate this on a weekly basis. Okay, you can't look at it for the whole year and determine if they worked overtime. It's week by week. Okay, so you need to be tracking everybody's hours week by week, have a set work week, and make sure that you're tracking when people work overtime during those weeks, not during the month, not during the year, week to week. Okay. All right. Any other questions? Wonderful. Okay. Choosing a business structure. There's a reason I subtitled this, Consult Your Financial and Legal Teams. And the reason I did that is, by the way, this publication that is available over here is excellent. It has a great deal of information. It's this thick. I'm clearly not going to go through all of it today. Choosing a business structure is a highly personal thing, okay? It really depends on how risk averse you are, how complicated, how comfortable you are with paperwork, how many meetings you want to hold, how many binders you want to have. It's extremely, extremely personal. So make sure that you consult with somebody to make sure that you're making a good decision. You can change your mind later, but it becomes a little bit complicated when you change gears and change business structures. So it is nice to have it in what you want to have it in, and from the get-go. Part of that mission and goal statement is important. Because obviously your plans, like, do I eventually want to hand this down to my children? And how do I want to hand this down to my children? Questions like that, where you see yourself going in the long run, can have an effect on how you want to structure things. Do I want to be able to divide up income evenly between everyone that works on the farm? Or do I want to be able to have one person get a lot more income and someone else get a lot less? What do I want that based on? You know, do I want it based on how much money they put in? Do I want it based on how much time they put in? You know, how do I want to do these things? And all of that will strongly affect what type of tax structure you can choose. You know, what type of corporate structure you should choose. So kind of thinking those things through out loud with somebody who knows the right questions to ask and how they can impact you can be extremely helpful. Okay, so if you do nothing and you're just a person or a person and their legal partner, be it husband or partner, you are going to end up on your personal tax return, okay? You're just going to be filing on your 1040 on the Schedule F, and that's the reason I had you all of you looking at the Schedule F, because most people who are starting out fall into that category because they literally just fell into that category, okay? If there are two of you that are working on the farm together and you have a partnership, you are by default a partnership. Okay, now that does require that you file a separate tax return. Okay, that requires that you file a Form 1065. Partnership does allow you a great deal of flexibility because, again, you can come up with creative ways to divide up income and things like that, whereas the corporate structures don't have as much flexibility. Partnerships, obviously, I put that I recommend an agreement. You don't have to have an agreement, but most people do have partnership agreements that talk about just what I mentioned. How is income going to be separated? What happens if one partner wants to leave or dies? Important things like that that need to be addressed because you don't want to run into situations that aren't covered by something you've already discussed, because then things can become unfortunate and no one wants that. Okay, so things that you have to file paperwork for with the state. If you want to be an LLC. Now, an LLC is something that you can do just as an individual, okay? You can also become a corporation just as an individual. I wouldn't recommend it, but you can. Co-op, obviously, is a group of members. Nonprofits and co-ops, I'm not going to talk about a lot today. They're extremely complicated. And if you have questions about becoming a co-op or about becoming a nonprofit, feel free to approach me after this session. I do specialize in nonprofits. I've, got a lot of people nonprofit status, so I'm happy to talk you through that if it's something you're interested in, but it's not something to take lightly. There's a great deal of public responsibility with becoming a nonprofit. Okay, so the LLC. If you have, again, if you're just like the sole proprietorships, if there's one of you or there's two of you that are members that are married or are domestic partners, you can be what they call a disregarded entity, and you file just like a sole proprietorship, but you get that same protection where you actually, it's a separate entity. So if someone were to sue the LLC, they would have to take extra steps to sue you also. It makes it harder for them to take your house if it's not on the farm. Do you follow what I'm saying? So if it provides a certain amount of protection for you. And I'm sorry, I almost got ahead of myself. You can also elect as an LLC to be treated as an S corporation, and we'll talk about the benefits of that here in a minute. And you can also, if you do nothing as an LLC and you have two or more partners that aren't related, that aren't domestic partners or spouses, you're going to automatically be treated as a partnership, okay? Because an LLC is automatically, if you don't elect anything, a disregarded entity, okay? So it's going to fall in this automatic entity scenario if you haven't done anything to say, I want to be an S corporation, treat me that way. Okay. The corporation, we'll talk about that in a minute, but it's basically anyone that can do an LLC can become a corporation also. Corporations, unlike an LLC where things pass through to those that own it, corporation, all the income and all the money and everything stays within the organization. So it's a very, very, very separate thing. So again, that can be great if you plan to kind of use it as a savings account and keep everything over here and you're in a higher tax bracket and you want to take advantage of that. So it can be a good thing for the right person. And I do have one client that it was really good for. Okay, so this is kind of a summary that talks about what I was just talking about. It kind of shows, we talked about the protection of personal assets. Now clearly anyone can sue you as an individual. Okay, if you are the farmer, for example, if I were an LLC, you know, someone, if they didn't like something that I did, they could certainly sue my LLC, and they could certainly sue me also and try to hold me personally responsible. It just makes it more difficult. Do you understand what I'm saying? So just because you're an LLC or a corporation, it doesn't mean you can't be sued. All right, anyone can sue anyone for any stupid reason. But it does provide you one degree of protection when it comes to protecting your personal assets. The pass-through taxation. So like we talked about, the sole proprietorship, partnership, and the LLC that doesn't elect to be an S-corp, and I apologize, or does elect to be an S-corp, it all passes, all the income is taxed on your personal tax return, okay? S-corporations, all their income goes right onto your personal tax return. However, you can be incorporated as a corporation and be an S-corp also. If you incorporate as a corporation, you default to being that organization I told you about where everything's all contained in that one place. So the only way that you can be an S-corporation where things flow through and there's actually certain tax benefits that I'm going to talk about in a minute to being an S-corporation is if you become either an LLC or a corporation with the state and then file an election with the IRS to be treated as an S-corporation. Okay? And there are a lot of things that you have to do to keep that S-corporation status that are pretty simple. You just can't have a lot of different treatment. Everyone has to get their income the same way at the same time, depending on their ownership. So it's a very strict and basic structure.
Can you use that for a certain number of years and then switch back to just the LLC?
Yes, you can. There's certain calculations that go along with that. So if you do want to do that, I would make sure that you think about it and consult your tax advisor as to what the tax effect of that would be. I haven't done that, so I couldn't tell you off the top of my head what the tax impact would be, but there is one. Okay. So this is the long version, and I believe that's on the front of the little flow chart we're going to go through in a minute. So this is the long version of the different benefits. It's also in that super uber thick handout. This is one page that's been pulled out of that. I'm going to go grab it. This book. And did Viva Farms have copies of these?
We have, this is our only print copy, but I have digital PDF that I can email to anyone, or I can direct you where to purchase it if you're interested.
So what Anna just said is if anyone wants a digital copy of this, a PDF of this book, please email her at Viva Farms and she would be happy to send it to you. I have a copy also. Feel free to email me too. Okay? And that's the Farmer's Guide to Business Structures. Okay. It is, I checked, because the law has changed in 2016 surrounding LLCs, and it was published after that change. Yes. The question was being asked about how the 2016 change in LLC law affects older LLCs, basically. And I would imagine that someone could probably rewrite their organizing documents now based on the new law. So that the requirements weren't quite as stringent. Because, yes, previously there were a lot more requirements of LLCs than there are now. So that's kind of a nice thing if you want to have that protection without, because they realized most likely that, you know, people having meetings with themselves and keeping minutes was ludicrous. And so now the law reflects that, whereas previously it did not. And we had the great pleasure of keeping minutes of meetings with ourselves. Okay.
It did help to keep organized, though.
Yeah, and he comments that of course it did help us all keep very well organized and remember the decisions that we made about the business, and there is truth to that. So, you know, you can't always keep minutes even if you are a single member LLC. Okay, so now we are going to do the choose your business entity flowchart activity, except I feel like I missed something. Haha, I found it. Okay, so the one thing that I wanted to mention to you guys that's new in 2018 is that there is a new deduction, which you are probably aware of. Everyone refers to it as the pass-through deduction. People were getting really excited that Donald Trump was suddenly going to get 20% off all of his partnerships and everything, and they were saying he did it for himself. If that's maybe the way you remember it. So, but the good news is pretty much everybody who has a small business can now take a 20% deduction on all of their pass-through income. That includes Schedule C income. And I apologize, I should have looked to be sure that it covers Schedule F income, because I seem to remember there being a special little niche, so I'm going to write that down and make sure we email everybody that was here. Clearly, if you are an S corporation, you would get that pass-through, but I want to make sure that you guys would still get it. But the one thing that I wanted to tell you about the tax benefit of an S corporation, we kind of already addressed C corporations. I'm not going to spend a lot of time on that because most of you probably won't make that choice. If you have a question about it, feel free to come ask me afterwards. But S corporations, you are required to pay yourself something called reasonable compensation. So all of the income that's distributed to you through an S corporation that doesn't run through payroll doesn't have payroll taxes on it, okay? It just shows up on your 1040. What the IRS has done is they went, oh no, we're not getting Social Security and Medicare on all of these S corporation earnings, so we're going to require that people get reasonable compensation from their S corporation. There's software out there, which I have access to, that can estimate what your reasonable compensation would be based on the area, based on the tasks you do, based on how long you work each day on average. And you can come up with a defensible, reasonable compensation number. That's important because obviously you want to maximize the amount of money you can give to yourself without paying payroll taxes on it. And you also don't want the IRS to come back later and look at the amount of money you've distributed to yourself from an S corporation and say, no, that was payroll, and reclassify it, and suddenly you have payroll taxes due, you have late payment penalties due, all sorts of awful, horrible, expensive things. So please be aware as an S corporation that there are reasonable compensation issues. There is a tax benefit if your farm has become lucrative enough that you can exceed that reasonable compensation threshold, but if you can't, you're probably not going to benefit from making that election. Okay?
I have a question. My wife and I were discussing the business entity types between sole proprietorship and LLC, and my understanding at the time, I'm looking for validation on this, was one of the reasons why an LLC isn't really as beneficial for us is that it's an attempt to separate assets for liability. But since we live in the house on the farm and the farm itself, the mortgage on it is also covering our house, there's too many things that break that liability barrier.
So the question that he's asking was whether or not they would benefit from being an LLC when they're living in the farmhouse on the farm and they own the farm personally, correct?
Yep.
So the answer is it depends. Personally, for example, I'm not an LLC because I'm pretty sure that if I did something personally wrong, that any court would uphold someone suing me personally, Do you understand what I'm saying? Because I do the work. So that's an example of a situation where it might not make sense. Now that I have employees, it might make sense for me to become an LLC because I'm protecting myself against things someone else does. So maybe it would make sense under that scenario. You know, you might be able to separate some of the ownership somehow so that it did protect you somewhat. But not being an attorney, I couldn't tell you specifically how you could do that. But as you can see, depending on the facts and circumstances, you know, it can affect how easily someone could pierce that corporate veil, as they say. So, I mean, yeah, the odds are pretty good if someone got injured on your farm, on your land, and it is held in your personal names, I mean, you'd be losing the farm anyway, right? So, what are you protecting at the end of the day? Having said that, if you have a nice nest egg somewhere, it could protect that. So, you know, there are other assets possibly other than the house and the land to consider. You know, retirement plans, whatever. It also can limit the amount of liability, because if somebody were to sue the LLC, and I'm speaking out of my area of expertise as I'm not an attorney, I need to qualify that. But if someone sues the LLC and wins against the LLC, they can only collect against the LLC. They couldn't collect against your future earnings, only the LLC's. They would have to reach through to the actual members of that LLC. So it really did, but a smart attorney would, you know. So it really depends. So at the end of the day, I think what's really important is to decide, you know, what you have the patience for. You know, it certainly doesn't hurt to put up one more roadblock between you and somebody else. But it can if you don't want to do the extra paperwork. You know what I'm saying? You know, because it does. Every step you take just creates, you know, one more piece of paper. So if you have the tolerance for it, it never hurts to protect yourself, you know, one more degree. Got it. Okay, our activity. Did you have a question?
I just have a, but the activity may answer it. I guess I just wanted to confirm that if I understand that the main difference between an LLC and an S corp, or the main reason that you would choose one or the other, has to do with whether or not your income is above the allowable income or the reasonable income.
So she was asking about the choice between an LLC and an S corp. So I'm going to kind of correct the wording of the question. An S corporation is only a tax concept. And a lot of people get confused by that. Okay? So when you go to the Secretary of State and you say, I want to be an organization, you can choose an LLC, you can choose a corporation, you can choose certain types of other unincorporated entities, and you can choose a nonprofit corporation. Okay? If you want to be a co-op or a nonprofit, you probably want to choose the nonprofit entity, but co-ops, that's also, and it depends, there's a bazillion options with that. And either an LLC or a corporation can choose to elect to be an S corp. Okay, so either one can make that choice at any time. All right, so the real key to deciding if you want to be an S corporation is indeed what Anna was saying. Is my income at the point that it's going to exceed what my reasonable compensation would be? Because if it is, that might be a good choice. Okay? All right. Any other questions? Okay. All right, so now we're going to do a fun activity. Woo! Be aware that when you're looking at this flow chart, the first page is going to talk a great deal about the possibility of becoming a nonprofit, so you may probably be zipping onto page 2 pretty quickly. Feel free to raise your hand and ask questions. I noticed that this flow chart is probably going to make you ask questions more than anything, more than give you answers. But that's a good thing. So this is going to kind of help you walk. It's designed to help you walk through and kind of see what might be the best entity choice for you. It does not mention trusts, which is why I did not mention trusts. Yeah, so we're going to take, let's say, 5 minutes to read through this. I'll kind of fill out the room. And if you have questions, like I said, please raise your hand and I'll come by and we can talk about whatever you got hung up on. Okay, enjoy. Okay, so I had one question. That I wanted to make sure that everybody heard the answer to, because I didn't talk about it. On your handout, it mentions a B corporation. What in the world is a B corporation? Okay, there's a lot of really great information about it in that book. If you want to read more about it, if you Google B Corporation, the organization that certifies corporations as B corporations pops up right at the top of the list. Okay, so a B corporation has nothing to do with organizing and it has nothing to do with taxes, okay? So be very clear, when you make a B corporation choice, it's not going to affect any of the paperwork you do with the state, and it's not going to affect anything you do with taxes. What a B corporation is an organization that has gone through this specific organization to be certified as being beneficial to society, okay? For example, Patagonia is a B corporation. You have to pass certain qualifications to say that you're environmentally friendly and do other such marvelous things for people. It has requirements about how you treat employees, about how you treat the planet. So if that's something that you want to have on your website or as part of your image or as part of your mission, it could be a really nice thing. I did not note what the fees are to become a B corporation, but given that it's a certification, I would assume there probably are some, but I couldn't tell you what they were. Okay.
It sounds like it's a status symbol.
A B corporation really is a status symbol, and it probably is more something that a larger farm would want to do, just to say, hey, I'm not some big, big egg, don't give a crap about anybody kind of farm. We're good people here. But most people in this room, everybody knows you're good people here without having that rubber stamp. So that's what a B corporation is. Any other questions that I haven't answered yet before we move on? Okay. Okay, we're going to talk a little bit about tax planning and about business planning. I'm not going to spend a lot of time on it because it's such a personalized area, okay? I did touch upon a lot of the things I'm going to mention here soon, but the moral of the story, and I'm going to repeat this multiple times, is that at the end of the day, you need to do what feels right, okay? Don't only let the numbers guide you. Don't only let the tax consequences guide you. I have a lot of people go, hey, should I buy this thing because I'll get a write-off? I'm like, well, not if it's a stupid decision. I mean, you spend $1,000 on something you don't need, you're only getting a $300 write-off or whatever. I mean, why would you do that? So again, make decisions you feel good about. That's the important thing to keep in mind. Okay. So when you are doing things that you feel good about, here's some ways that you can plan around that, okay? So if you're planning a large purchase, for example, someone mentioned the purchase of a vehicle, if you know that it's coming anyway and you have the money put aside for it, make sure you do it before the next year comes around, okay? Because that way you get the write-off in the current year instead of in the following year. That can be a powerful tax planning tool. If you have had a really successful year on the farm and you have improvements you want to make sure that you do it in the year where you can offset those revenues, okay? The other thing that you can do that's very interesting, but there's a very weird farm-only law that I want you to be aware of when you're thinking about this. You can purchase your supplies for the next season in advance, obviously. You can stockpile fertilizer or seeds or whatever it is that you need to buy. But be aware that if you've purchased more than 50% of what you are going to be using next year, that unless you've been in business for a long time and you've never done this before, you could run into some weird problem where they only let you deduct a certain amount in the current year. There's a funky law about prepaid supplies in the tax law. So if you're planning on doing this because you have a bunch of money and you want to do the math and find out what the parameters are you have to be aware of, call me and we'll discuss it one circumstance at a time, because it's a weird and oddly complicated law. The other thing that I recommend, there are some people, for example, that will do classes on their farm, or they'll have dinners, special fundraising events, and they'll start selling tickets early in order to generate revenues. That's awesome, but be careful. I would strongly suggest that if you're doing it, for example, for 2019, don't start billing in 2018. Okay, if it's a June event, start billing in January, sure, but make sure that you're keeping the income in the year you're having the event, and you're not pushing the income into this year. Make sure that it stays in the year it belongs in. Okay, because that's a common mistake that I see oddly often. And the other thing that we already talked about is the S corporation, okay? If you are one of the fortunate few who has a really lucrative farm, it's doing great because you're having all these super events and having chefs come and doing things on your farm and really managing to do things in a wonderful way, and you've exceeded that reasonable compensation, do consider an S corporation. It could have a substantial benefit for you. Okay, are there any questions about tax decisions before I move on to other stuff?
I just have a question about the reasonable compensation. Is there a way to get an idea of what it is in this area without having that software that you mentioned?
So there was a question about the reasonable compensation and how to get kind of an idea of what it should be. What the software does is it looks at comparable jobs in the area. Okay, so if you were to do that, it wouldn't be as defensible as a tried and true software, obviously, that has actually had success when going up against an IRS inquiry. But having said that, if you research the position yourself, like, hey, I manage this farm and I've looked through all of these magazines, and in Skagit County, farm managers are making X dollars. That's what they're being offered. And if you had enough substantial information to support that, hey, I made an intelligent decision about how to compensate myself, it's more likely to hold up if you're questioned. Okay? Obviously, there's no guarantees when you're questioned, but that's what they would expect you to do. Yes?
This might be too personal, but in the first year of starting a business, so we have already filed for LLC status, but we aren't going to be growing until next year. So would it make sense to do purchasing this year or next year?
So the question is, in your first year of business, if you haven't actually done any planting or anything, does it make sense to have any expenses, do any purchasing before the year end? And the answer is, it depends. And what it depends upon is if you have other income. And if you do have other income, it might make sense to do some of your purchasing now. Again, you're going to want to be mindful of how much purchasing you do, but because you definitely, from the reading that I did do, you would fall into that 50% category because you're brand new. So I would make sure that you don't do too much pre-purchasing, but things like equipment or greenhouses, things that aren't supplies, purchase away. And that shouldn't be a problem, especially if you generate income in the next 2 or 3 years. Because as long as you're generating income, they're not going to start wondering if you're writing off your garden. So yeah, I think you've done everything right, especially since you created the LLC. So yeah. Any other questions? Okay. Okay, when should you take on debt? Debt can be a scary thing. If it absolutely terrifies you and you're not confident that you can pay it back based on your increases in income that you expect to have from building the new greenhouse or buying the new tractor, don't do it. But if you do think that you have enough income to cover those payments, and you're confident of that, then absolutely, it can be a very intelligent thing, especially if it's going to help alleviate your stress, if it's going to help you have more spare time, if it's going to help you improve your farm or increase your revenues. All of those things are reasons where the interest that you're going to incur in order to borrow and improve your life and your farm can be worthwhile. So again, make a good decision. If it's something that feels good, it's something you want to do, and you're comfortable that you're going to be able to cover those payments in one way or another, then absolutely it can be a very, very positive tool for your farm. Also be aware, this is not something I put in the slides, that there are oodles of farm grants out there. It never hurts when you're looking at a major improvement, especially to kind of pursue grants that are out there. There are a lot of people that love to support agriculture, and you might be that person they want to support. In fact, there's a grant right now through Community Action. There's paperwork on the table here that they are giving grants right now to different farms for equipment, I believe. So yeah, that can be very valuable to you. The other thing to be aware of too, when you're looking at grants, there are people in the area that specialize in grant writing, and it wouldn't hurt to give one of them a call because they may be aware of a grant that's available right now. The reason I know about this one is I work with a grant writer all the time, and she always goes, "Oh, hey, there's this great new grant." She knows. So it doesn't hurt to call somebody who would know and just say, "Hey, is there anything that would be available to me right now?" And they could tell you probably right off the top of their head. There's also a great website that I subscribe to called Grant Watch. It's $200 a year, so it may not be worth it for some of you. But it can tell you what grants are circulating that might be relevant to you and what you're doing. So, you know, if you are looking at a major purchase, that might be a worthy investment. Or go to a grant writer and let them look. The hiring employees, similar question as when you're considering taking on debt. One thing that I mentioned to one of the gentlemen here, he asked me about hiring employees. There's a few things to be aware of. It does require more paperwork. The paperwork is not costly to delegate. For example, our firm for $50 a month will provide you with the software that'll do all the payroll and will do all the payroll tax returns for you. So it's relatively inexpensive if you're at the point you need help, okay? If you want to do it yourself, if you take on employees, that means there's 3 tax returns to do every 3 months. Okay, there's a federal tax return for Social Security, Medicare withholding, right? There's L&I for workers' compensation if someone gets injured, and there's employment security. So that way, if one of your employees gets laid off, then they have coverage. Okay, so those 3 tax returns every 3 months. Then at the end of the year, you do your federal tax return for federal unemployment, and of course you have your W-2s. Okay, so those are all the things that you're going to have to keep on your radar if you bring on employees. The other thing I recommend to very small businesses, and frankly most businesses, unless you have a great deal of working capital and you just don't worry about cash flow, if you have any cash flow worries, and I think most of us in this room that are small business people do, pay your people weekly. Makes the paychecks really small. And pay your payroll taxes weekly. Makes the payroll tax payments really small. You can't pay your state payroll taxes except for at the end of the quarter, but they're not as substantial. But the federal taxes, you can make as many payments as you want, and it keeps it much more manageable. Because in my experience, the one thing that will shut down a business faster than anything is unpaid payroll taxes. So stay on top of it and take on the responsibility with seriousness, because if you don't pay them, they will eat you alive. So stay on top of it. Okay. Any questions on what I covered on this slide? No? Okay, we're pretty much at the end. So I have some additional resources here. I'm going to leave it on this slide. And actually, can we email people who have signed in the slides? Okay, so we'll make sure you guys have these slides so you don't have to write all these things down. The foodfromfarms.org is a website that I actually maintain. So, you know, a lot of the information we've covered today is on there. We're working on more farm resources. I intend to put this presentation on that website as well. So that will be available there. And the information for the Community Action Grant, that first line, if you need a grant for equipment, that's the contact information. If you need more information about that grant, that very first person. And there's my information. And we did it.
Thank you so much.
Yeah, so thank you so much, Sherry, for sharing some of your knowledge